Over the next 10 minutes, I'm going to show you the 3 steps that I teach to my students. My name is Felix Intro. I'm a former investment banker, and I'm now a retired investor. And I want to be very clear with you. I'm not promising you any specific percentage or monetary outcomes here. Trading and investing involves substantial risk, including the risk of loss. Yes, this isn't financial advice. What I want to do is share with you the 3 rules that I follow, the path that you can take to potentially improve your investment approach. But let me ask you this. Would it be helpful for you to spot stocks before they go up? Like these ones here. FOA is a trade that I was in. It was up about 58% in 14 days, which is pretty glorious. Again, not a promise of these results. Or we have PayPal here, right? People often call it PayPal. But there was a moment where we actually made quite a decent return here, 23% in 51 days. Or Philip Morris. Cigarettes, how exciting can that be? Well, 30% up in 4 months can be pretty exciting. And like many of you, I spent about 10 years in the markets doing the wrong things until I was taught how to do the right things. And without the 3 rules that I'm going to give you in this video in the next few minutes, you're missing out on a systematic approach to identifying opportunities just like the ones that I showed you. So let's learn the rules. Imagine your potential. If you knew exactly what trade to open and when, if you knew how to systemize your profit taking and your risk management, well, you're in luck. We're going to do exactly that here in the next few minutes. And when I started to figure these rules out for myself, I was honestly about to run out of money. I had a massive back injury. I couldn't sit or walk for 6 months. I had hospital bills. I had a business that wasn't doing very well. And I was saved by friends I'd made while I was working in an investment bank. And these friends and mentors changed my life. And the moment you hear what I now call the Wall Street Protocol, you'll be able to use this for the rest of your life, just the way that I am now. So make sure you take notes, because I want to make sure that you walk away with and apply this to your investments, because there's really nothing worse than coming to a lesson like this and getting some great insight and then doing nothing with it. Have you done that before? Well, I want to make sure that doesn't happen to you here today. So please make sure you take notes. Right. So there are 3 parts to spotting a great trade. The first part is this squiggly white line here on the screen. In all seriousness, this little white line is what represents the stock chart here, okay? We're going to keep it very simple, and then we're going to look together at some real charts in just a second. Now, the red lines, there are 2 here, are what I call resistance zones. So stocks tend to trade between 2 lines in kind of a zone. I mean, you have these sort of highs here, right? These 3 highs, and we connect them with that red line, and then we connect the 3 lows also with a red line to make it really visual. And then when you break through that line, there's a moment where you potentially really take off as a stock. So that's part 1. That is the resistance zone. If you're with me on that, that's good. Part 2 is a little thing called the 50-day moving average line. It's the most important line out there that traders look at and investors alike look at. And this applies exactly also to people who have long-term investing ambitions, by the way. And what we want is for that line not to slope downwards as it was at the beginning. We don't want it to even go sideways. We want that line to slope upwards so that it's picking up momentum. And as you see here in my example, it's picking up momentum the same moment we break out of the resistance zone. So that's item 2. And then there is a third thing, and that is trading volume. We want everybody to be trading this. We want everybody in this. We want institutional money to be buying the stock. So how do we know that they do? Well, the bottom of every stock chart in the world, and maybe you've never noticed it before, that'll be completely fine. It will make you kind of normal. You probably have friends. There is a little volume bar at the bottom here, and that we want that to be big, as in significantly bigger than the previous week or weeks. Now, when I first learned this, I never looked at a stock chart, and I thought it can't be that easy. That's really what I thought. I was sitting on the trading floor in a bank, and it was being explained to me, and I thought, if it was that easy, why would I never be using this? And honestly, it isn't that easy. There is a crucial piece that's missing here, but let's look at a few real stock charts together first, and then I'll show you the missing piece. Here's me, by the way, when I couldn't walk or sit. I was lying horizontally for about 6 months of my life with a cat behind me, and my chief financial analyst, Tallulah. Now, my first winner, and we always remember our first winners, it's a stock called Innovia. It's a very, it's a terrible joke, isn't it? Never mind. The ticker symbol is INO, that really matters. And look, I picked this stock, and I was very happy. And I believe I got in there, I don't know, somewhere around here. I think that was the buy moment. And then this thing went up about 3x, right? Again, not promise, not typical results, past performances, or indicator of the future and all that. But I was very excited. I was really relieved because I had horrible pain. I couldn't work. I couldn't travel. I couldn't do all the things that I needed to do for my business. And this one trade allowed me to get some money. And it gave me hope. It gave me like a sort of North Star of what made it possible. So to me, this really meant a lot, this trade, but I want to make this valuable for you. So let me share with you not my life story, but the real problem. And truthfully, nobody really wants to tell you this. Winning stocks eventually turn into losers. And you can see how the stock went up. I bought it at something like $69, and it's trading out here at the top at about $168. So it's a pretty nice increase here, right? But what this chart doesn't tell you is that this stock afterwards collapsed. How far do you think it collapsed by? Well, it's trading, last time I checked, and let me pull it up for you live. So yes, I'm recording this, it's trading at $1.58, 56. So you get the idea. This has been an absolute freaking catastrophe for a lot of people. I mean, a 3x. But it means if you held on, you would have wiped out 99.9% of all your money. So how do you deal with that? Things that go up 300% and then down 99.9%, which means you lose all your money. Well, first, before we jump into that, and I'll give you the rule how to deal with that in a moment, let me show you what this looks like in real life. So let me show you the whole 3 steps right now. So let's look at a different example here. Lululemon, tight polyester garments. Don't know why people wear them, but there we are. So we got into Lululemon at about $400, which is around about here, if I'm not mistaken. It might actually, my mistake. I believe around about here, around about $400. The exact number doesn't really matter so much for the trading purposes. And after that, or around about that time, there was a great big beautiful volume spike, right? The institutions were buying, so that's looking good. The 50-day moving average line here, which is that blue line on my chart there, the 50 MA that I was just talking about, that started to re-pick up, so all the stars were aligning, it all looked beautiful, right? So we got them at about $400, brilliant, right? The top here was that one, the top was about $520. And I can tell you that we sold it somewhere around here, around $490. So we made money, right? We made $90. We didn't make it to the top because you never know what the top is, but we made some money. And that's how we lock in profits. We made 23% in 2 months on this, which is pretty good, right? My book, that's pretty good, 23% in 2 months. That's as much as the market did in all of, 2025, around about, 2026 was a little bit less. So just in one trade in 2 months, right? But let me ask you this, would you have sold up here? Would you have sold up here where I sold? If you're honest with yourself. Or would you have thought, well, maybe it'll go back up to 500, right? So maybe you thought, oh, it was up here and then it went down a little bit, it'll probably recover. And it'll go high. So I'll explain the rule for exiting these trades for you just in a moment. But if you look at the chart here, many people would have held on, and they would have thought, well, look at that. Stock's consolidating, right? This looks good. And then right there, it actually looks like it's recovering, doesn't it? A little mini breakout there. You see a little mini breakout there, right? Sort of bounces off again. A lot of people would have looked at that and said, look, it's rallying. Let's hold on. But then what happened? Let me show you. This here was what I call a fake out, and they happen with very frequently. And then it went down to about $270, right? So having bought up here at 400 and at 400, that is not a pretty experience. So you could have lost, 50% of your money or something like that, give or take. So the truth is that I've made these mistakes many times, and I'm sure you have too. It's kind of a common bond here, right? And we've all screwed up. It makes us human. So how did I solve this problem? Well, I surrounded myself with mentors who knew better. Mentors who would keep me in line, check on me, and make sure I understood the little nuances, and that I followed my rules. Make sure I knew what to do when, say, interest rates change, or the Fed meets, or some earnings report come out, and all these things that get thrown us on the market. And then the very fact that you are here means you want to be one of the smart ones, right? You want to improve. You want to improve your skills. You realize that's a thing you need to do to get the outcome that you actually want. And honestly, it's a widely known fact that no one has ever become a great investor. No, we all have mentors. And my mentors have their mentors, and their mentors have mentors. That's how we learn. And that's why I want to give you a chance to learn directly from me and my mentors. And I'll allow you to get there. And that's why I want to give you a chance to learn directly from me and my mentors. And it'll allow you to get there further and faster, in my humble opinion. But before we get into that, let me summarize the system here. We've got 3 steps, right? Step number 1, spot the breakout. You've got the rules down, right? You've written it down. Step number 2, well, we buy the stock, okay? That's kind of important because if we don't buy the stock, we have got nothing to talk about. Step 3, we set a stop loss. That's how we exit. There's more to that in a moment. I'm going to walk you through that in some more detail. I'm really promising you a lot of information here in a short period of time. And then we move those stops up as the stock goes up higher and higher. And then on step 4, we rinse and repeat. We do the same thing again and again. So it's really just 3 things that we do again and again and again. And the beautiful thing is that with my system here, you don't need to study stocks, financial reports. You don't need to learn lots of strategies. You don't need to watch your trades all day. Really zero benefit in watching a stock chat constantly. It makes absolutely no bloody difference. So our goal is methodical gains using a systematic approach. So we can live the life that we want to live and do the things that we were put on this planet for. So how do we do that? Well, we trade stocks that we flag. We trade one strategy again and again. And we systemize the profit taking and the risk management so you can go and you can enjoy your life. That's what life's all about. So let me ask this. How would you feel if this was your trade? Rail, ticker symbol RAIL, up 180% in 42 days. Not promising good returns, just saying it's a past performance. How would you feel about maybe this one? TIL, TIL, with 466% in 33 days following our rules. Would you still feel good about this one? Or what about that one here? SEZL, up 115% in 136 days. Well, if you want to learn this approach, you have 2 options. Option 1 is you walk away with this lesson, you do it yourself. Now, you will likely lose money as you learn, and I can tell you that because I've seen thousands of people do exactly that. You might experiment for years, maybe you'll give up, probably, and you will very likely feel overwhelmed and stressed. And honestly, without an experienced mentor, you are going to fall for some of the traps that the market puts out there for you. That's option 1. Most people do option 1. Option 2, well, is you get an experienced mentor. If you wish to do that with us, you can book a call with my team, and I still want to show you the exit rule in a second here, but we'll show you how we've helped over 25,000 people so far to learn the systematic approach to the markets. But why would you do that? Well, look, you learn the protocols faster. You get all the protocols handed to you. You see my research every single week. You get one-on-one personalized coaching sessions. And here's the thing. We teach one-on-one. So as we only have so many retired Wall Street bankers as mentors who are my mentors, spots are naturally limited. These are professionals who spend decades on trading floors and their time is valuable. They've worked at places like Bear Stearns and Goldman Sachs and Deutsche Bank and big hedge funds. But you'd be surprised how many people walk away from this video and say, oh, I will now sit in a dark room by myself and I'll figure this out on my own. I don't need people who've done this for decades. And those people then work really hard. They study really hard. Some do it for months, some do it for years. I know because they've come to me afterwards. So if you want to learn this system, have a chat with us. You can click on that apply now button that you see somewhere below here, and you can fill that very quick form and it'll take you 30 seconds and you can book a call while I explain to you when we close out of our trades. So let's look at how we exit trades. I promise you this, and this is a very, very, very good rule of thumb. Now, there are some refinements to this depending on what the stock is and so on, but it's a good starting place. The way I'm saying that is if you're in a very, very volatile stock, you're going to have to adjust this for that, but that's a little bit more technical than we can get into here in the 20 minutes we've now been at this. So what do? We set a stop loss and we decide where to set this before we ever open that trade or buy that stock. Generally speaking, 46% is a fairly good place to be, but as I say, if you're in high growth stocks or volatile stocks, you're going to make that a bigger number. So let's just say this point here was your breakout, and then say this point down here was minus 6% below, then that would be our stop. Okay. And what that means is that if the stock went down and dropped below, we would get kicked out here, and therefore we would not accrue a massive unmanaged large loss. And because our trades are pretty small, we'd lose an amount of money that we really wouldn't notice all that much, and all the other trades should, ideally, help to balance out over time. So my mission here is very simple. I want to help people build wealth using proven Wall Street methods. And what does that actually mean? Well, it means that you are learning a systematic approach to growing your portfolio over time. You don't have to do anything drastic. You don't have to quit your job or anything like that, but you build that second income stream potential. And if you might then be wondering, well, how do we achieve that? Well, it's very simple. We share the trading knowledge, but it's very simple. We share the trading knowledge that traditionally stayed inside investment banks. All the trading knowledge in the world isn't sitting in books or libraries or experts on TV. Much of it is sitting on the trading floors inside these investment banks, because if you go and work for an investment bank in a trading role, your boss is going to teach you how to do it. Why is he going to do that? Because you will make the team more money, and if the team makes more money, you'll get a bigger bonus. That's just a simple capitalist incentive scheme inside banks. So we're going to teach you those same methods. So how do we do that? Well, we learn from real Wall Street insiders. And that's why our head coaches are all real investment banking insiders. Now, if you haven't booked a call yet, well, maybe it's because you're thinking, I'm a beginner. I'm new to this. It's a lot of information. I'm not sure I can take this on right now. Well, let me tell you about a very sweet lady called Patricia. Patricia is 73 years old. She's a grandmother. She's a student of mine. And what's really amazing about Patricia's story is that she was a complete novice. She'd never done any investing herself. She let the bank do it. Not only is she up at the time she sent me this 50%, but she then took it on herself to teach her 5 grandchildren. And actually extended our training with us because she wanted to make that impact on the next generation, which is what I absolutely love about this. We don't just impact one person, we'll be impact the entire family line going forward. So we now change the life of not just this lovely grandmother, but 5 grandchildren. If you think about also their future children and their children's children, that's honestly the most wonderful thing that I can achieve in my life to make a positive impact. And as Patricia says here, she says, I'm 73 years old. If I can do it, you can do it too. And if you are that beginner and you're wondering, this is going to be too much for me to take on, we have specialists on our teams. They're experts at helping people who are just getting started, like Patricia was. And you can have a chat with them, click on that apply now button and fill out that very quick form. Pick a time in the day that works for you. and learn this approach. Honestly, having that second experienced set of eyes look over your shoulders as you invest, it can make all the difference. And it's just so obvious when you think about it. Like with everything else in life, we have teachers, right? With money, we just try to figure it out on our own. But with everything else, we have coaches and teachers. And you don't have to figure it out on your own. We teach one-on-one. And as we only have, therefore, so many retired Wall Street bankers as mentors, our spots are, of course, naturally limited. So you just click on that button, you book a call, the call is free, and I look forward to seeing you inside the community if you choose to join us. And I wish you all the best and great success.